Hello everybody, I thought we'd make a start on this week's live stream. So welcome to the stream. Do these every Friday at 2:30 UK time, and it's a quick look ahead to the major announcements for next week, and then we jump onto the markets, jump onto the charts, take a look at what's going on. Obviously, a lot of my focus this week, not surprisingly, given the drama that continues in the UK, has been on the pound and gilts. So I'll talk a bit about those. I haven't looked at stock markets much this week, but I'll talk a bit about obviously all these markets as usual. And as usual, if you have any questions or any stuff you want looking at, if you pop it in the chat. Let's just do all the housekeeping stuff first, just to get that done. So a risk warning, this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, contracts for difference, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Yes, it is. Right, a quick look ahead to next week. The shift next week is on interest rates and inflation, I think. There's quite a bit to watch. Clearly, I mean, that is, politics aside, that's still the hot topic, the cost of living and what central banks are going to do about it with regards to raising interest rates. So on Wednesday, Australian inflation data is out. Chinese GDP, so how well or not is the Chinese economy doing, and then the Canadian interest rate decision later on in the day. Thursday, I think this will be a big one, European interest rate decision on Thursday, so I think that's clearly one to watch. And then closely followed on Friday, I'm guessing the early hours of Friday morning, my time here in the UK anyway, Japan interest rate. So, three pretty major rate decisions next week. I mean, clearly, market expectations will be what they are. And as usual, at the moment, so much of what goes on in markets is driven by the chat, the press conferences around these interest rates. So I think that will be the one to watch. Right, let's crack on. Quick advert for the trading course I'm doing, covering medium-term trading, weeks and months, shorter-term trading, days and weeks. I've recorded half of a new course this week. That's probably going to be about 8 hours worth of content when it gets done. If you've been on the course before, I'll send you an email so you can access all that new content. If you haven't been on the course before, in a couple of weeks' time, there'll be about double the content that there is there already. So I'll let you know on that. Of course, in the course, I cover setting proper stop losses, how to run winners and add to trades, risk management. All this stuff is really important, but all lots of novices care about is where to buy and where to sell, and that's not even half the story. So I cover a lot of that stuff on the trading course, and trading psychology as well, which plays a big part, perhaps not as big a part as has been made out over recent years. If you have a poor trading strategy, your trading psychology, even if you're all zen about everything, isn't going to save you. But if you have a good or reasonable trading strategy, then clearly trading psychology is an important part of it. So at the moment, there's over 8 hours of pre-recorded content. There'll be, like I say, I think double that almost by the end of October, when I finish doing the latest bits of the course. There's 3 hours of live webinars, so they run every month with me. So when you enroll on the course, you get the monthly webinars. Unlimited support. If you want to email me or have a chat with me, more than happy to do that. And to find out more, go to jonesthemarkets.com. The link is in the description for this video. Any questions, drop me an email, dj@davidjonestrading.com. Right, let's have a look at the markets. Let's start off with the pound. I traded the pound last week. I talked about it. I remember talking about it in the live stream last week and saying, I quite fancy buying it, but maybe not today. As usual, I couldn't stick to that. I ended up buying the pound last Friday, about 5 o'clock, I think it was. So it would have been in here somewhere, around 111 something, 70 or something. And it did okay. I mean, I was quite encouraged by what happened on Monday. It gapped up, so I moved my stop. I came out for a small profit, nothing dramatic. And this is where we are now. So now on the pound, we are pretty much trading around the lows from last Friday. So not much has changed. And there's been clearly a lot of volatility because we have lost another Prime Minister yesterday. But it doesn't really change things from a bigger picture point of view. That's the pound against the dollar. It's the trend is still down. It's been down for much of this year. For me, I'd want to see to think that this was changing. I'd want to see strength through 118. I do think these lows that we've seen at 103. I think I said it last week. These are important lows. I would be surprised if those lows were taken out quickly. So I'm assuming, that maybe we have seen an important low for the pound, but it's not showing any signs of changing that downtrend at the moment. So I'm a little bit don't care, to be honest, this week. Pound against the dollar. We've seen quite a bit of support mid-October ahead of 109. Maybe we'll get again a bit of a bounce next week. It's struggling up about 114, 115. It's pretty dull, to be honest, for me. I thought, last week, I thought it was an interesting opportunity last week because we had, what did we have last week? We had Liz Truss's press conference, didn't we? 2:30 last week, and that caused the volatility. So I bought in last week because it stabilised, but it didn't really get much of a move on this week. So a little bit boring for me, pound against dollar. Let's talk about euro sterling. I did do a trade. I'm in a trade at the moment on euro sterling, and I put it on yesterday at 4 o'clock, 5 o'clock yesterday. So about here in at 87, and it's 87.65 today. It's pushed out to a new high for this little recovery that's been going all this week, and that's why I bought. I thought we got a little recovery going on. Maybe we're going to see a bit more strength. If we go back and look at the daily chart, I mean, it's been a pretty volatile month for euro sterling. I still think I'd probably still favour the euro to gain a bit against the pound, but I don't think we're going to see these old highs, at the height of the craziness, threatened anytime soon. So on a daily chart, it's still a little bit mixed for me. On an hourly chart, for me, the trend I'm following is quite a short-term trend, from this week off the lows and looking something like that. So for me, I'm in the trade. I'm happy with the trade. I've pushed the stop to break even, and I'm trailing it behind at the moment. So we'll see if it pops a bit higher next week. That'd be great. So I wonder if maybe we'll see a bit more of a recovery for euro sterling, perhaps up to sort of 88.40. Let's see what happens. But 86.80 was good support Wednesday of this week, and good support yesterday. That's why I bought it. So we'll see. But yeah, a little bit of recovery going on, but a little bit boring as well. Not the most exciting market at the moment. Dollar index. It's been pretty volatile, dollar index, but a bit directionless as well. But you'll know, from the previous stuff I've done, I'm a big fan of the dollar index. I've still got my longer term trade on the dollar index, long the dollar index. But it's been a little bit sideways. I mean, it did end of September hit fresh multi-decade highs again. Absolutely, still be a buyer on dips for me, the dollar index. It's just a bit directionless at the moment, and clearly at some point this trend in the dollar index is going to run out of steam. But I think plenty of people have felt that all the way up, and the market's just carried on going up, hasn't it? So for me, absolutely still a buyer on dips, but a little bit dull overall, to be honest, over the last couple of weeks or so. But for me, still positive, still looking to be a buyer on dips. Let's see. Do we get a bit of more of a major sell-off next week, or does it break out through 115 and we start moving again? So for me, a bit sidelined on the dollar index at the moment. What else? What else can we look at? What I did trade. Let's have a look at the metals for a change. And I'm going to start off with silver. I broke my 18-month duck this week, or my 18-month not actually trading silver. I sold silver on Monday. I got closed out of it about half an hour ago, 45 minutes ago. So I sold it at 18.85 in here somewhere. And then it got down to 18.20 yesterday. It came all the way back to where I got in, and it started moving lower again today. So I moved the stop down. So I came out with a small profit. But actually, from the dailies, I think it's interesting, silver. There's absolutely, from a daily chart point of view, there's absolutely the argument to be a buyer of silver down here. If you had a bullish view on silver, and of course, if you thought, well, perhaps the US dollar was going to come under some pressure, that would help silver as well. I think it's an interesting trade to be a buyer down here, even though I was short this week. But if I was a buyer now on silver, the low is at 17.55 or thereabouts from the 1st of September. You could make the argument, and I would make the argument, that the trend, that correction that's been in place since, when was that, mid-April this year is over. So perhaps we are seeing silver on the daily chart trying to build a base down here. You're seeing a lot of support, this $17.50 to $18 range on silver. So perhaps it'll start to get a move on over the next few weeks, and we could even see a run back up to $21, the highs from October. So I think that's an interesting market. Like I've said in the past, it is absolutely not my favourite market, because historically, or over the last 12 months, if I've bought silver, it's gone up. If I've sold it, it's gone down. No, if I've bought silver, it's gone down. If I've sold it, it's gone up. I find it quite a frustrating market. But looking at the dailies, I do wonder if perhaps it's building a base down here. So perhaps that's an interesting one to watch. We take a look at the price of gold. I did see there was a question in there about gold. Do you think gold will drop to 1,300? It's another one. It's interesting, and I think these markets have not been that interesting for me. But I think this is one of these markets at the moment. I think you could make an argument for being a buyer or a seller. So if we look at the bearish case for gold, it peaked this year on the Russian invasion of Ukraine, traded up to 2070, and it's just been in decline ever since. It had a run up to that trend line in early October, and a little poke through, couldn't hold it. So again, you could make the argument, absolutely, the trend for gold is down. So if the trend for gold is still down, what's our target going to be? Well, for me, the next obvious target is probably going to be, these old Corona lows from March 2020. I mean, it's spiked down to about 1450 to 1560. So for me, if I was coming up with a target for gold from here, I'd be looking at 1560 on the downside as the next target, because the trend is down. However, you could also say, okay, the trend is down, but so far at least, it has held just today above that low. That low from the end of September comes in at 16.15, near enough. It's 16.35 at the moment. So you could make, if you thought there was going to be a bottom for gold, it's an interesting risk-reward trade down here. It's not one I would do yet. I think if gold is going to turn around, it's not like it's suddenly going to be trading at $2,000 gold. But it's interesting, does it continue to make this base around 1600, 1615? Let's see what happens. For me, if 1615 breaks, then that's it. The trend is still down, and away we go to the downside. Personally, I would probably still rather be a seller of gold than a buyer for now. But I'd rather sell a rally from here. So for me at the moment, there isn't really a trade in gold there. So let's see what happens with that one. But 16.15 I think is the big level. So nothing that's too exciting so far. Let's take a look at some of the. Let's look at oil. I was going to do a trade in oil and I missed it. I missed it today. The trade in oil. I don't know. I can't remember what I said about this last week. I think I said actually that oil had been, until natural gas, which I'll talk about next, oil had been my biggest winning trade this month, because I caught a chunk. Oh, why has that done that? I caught a chunk of the move, that bounce from late September into early October. So let's take a look at oil and the trend in oil. I do think this is an interesting market to watch next week, and depending on where it trades today, perhaps there's still a trade for me on oil. Why won't this line draw properly? Oh, let's just plonk it there. So for me, let's just get rid of that one for now. So I suppose you could make the argument, the sell-off in oil from June around 120 took it down to about 76, and it's broken out, to these old highs as well from early September. So you could make the argument, okay, the correction or the downtrend, whatever you want to call it, in oil is over. Okay, so that is one argument you could make. And I would probably lean to that. The trade I was trying to do today, and I could still do it, I suppose. Oh, why is that doing that now? There we go. Oh, I did miss it. I was trying to buy at 84.50 and I wasn't paying attention and the market just ran away. So for me, I think if you thought that was the case, that correction is over, there's definitely a trade, and my stop was going to go the other side of 81. And looking to see next week, do we get a move in oil back up to the highs from earlier October, back up around $92. So for me, I think that is, you can see it. You can see that downtrend from June on the hourly chart here. And I'm just wondering, we've rallied out, we've pulled back. Is this the pullback basically before the market goes boom and up again? You know, I struggle to see how oil is going to be threatening $120 a barrel anytime soon, given everything that's going on economically in the world. But I do wonder if we get a bit of a run from here back up to the highs from earlier in the month, and maybe even back up to 95, 97, that sort of area from the summer. Let's see what happens. But I was a bit slow today. I wasn't paying attention, and I might have to be a bit patient to see if it's going to get filled there. But yeah, I've just seen the gent has said you could also say that oil is making a lower low. You could off that hourly chart. Yeah, you could. I mean, it did break below yesterday's low. You know, it was trying to recover and it broke below yesterday's low. So absolutely, if you thought actually this is just a dead cat bounce in oil, you could use this strength to sell short. If I was selling short oil now, I think the closest I'd want my stop would be above yesterday's high, which is up around 87. I'd probably want it a bit higher than that. But for me, at the moment, I am definitely leaning to whether we get a bit of a squeeze higher. Let's see what happens. Now, natural gas. This has been my best trade this month. I actually came out of it yesterday. I was trailing a stop down and I got knocked out on this rally yesterday. But I'd sold it. I opened the trade up at $6.80 and I came out about $5.40. So I caught a big chunk of the move, but the market has moved lower again today. And I saw somebody asking, would you think about buying natural gas? I would absolutely not buy natural gas today. Not today. Because for me, look, we've broken some big levels, a big level on natural gas. It remains to be seen whether this is a false break. But yesterday and today, we've taken out these lows from July. What were the July lows? 530, 532, something like that. Really interesting market to watch next week because actually, I think as I've pointed out before, the longer term trend for natural gas is still up. So whilst I wouldn't be a buyer today, if we saw a bit more stability next week, perhaps we're seeing this longer term trend starting to make to reassert itself. So I think it's really interesting, and it's what was I going to say? I was going to say something then about the media reporting on stuff. You know, you don't hear much about what's going on with the gas market. The price of natural gas has almost halved since August, which is great, hopefully, for the cost of living and all of that. I know in Europe, clearly, this is US natural gas we're looking at. European natural gas is a different market. I'm going to have a quick look at that, actually, because I've not looked for a while at European natural gas. Let's see what that's done. European natural gas, what does it look like? I mean, okay, that's come off as well. There you go. There's European natural gas, which has gone from, where's that gone? So in August, it was 340. I don't know what that is. Is that euros or whatever? And it's a 113. So the European natural gas market has collapsed back to where it was before Russia invaded Ukraine. So, you know, hopefully that does bode well for gas prices, you know, going forwards. But you don't hear, you know, you get lots of, oh my God, isn't it terrible when these markets are running away? But I've not seen much coverage about the collapse in the gas prices. So I think it's quite interesting that by the time a story hits, I've said this before, the mainstream media, quite often the move has happened. So it'd be interesting if they do start picking up in this slide in the gas price. But clearly a sizable slide, interesting market to watch next week. Wait to see. For me, the big support or the first potential levels of support, late Feb levels, around 450, around this sort of area. So we're at 515 today, breaking a big level. Let's see how much follow through there is next week, or whether we see these buyers come back in. So yeah, it was good trades, good trade on natural gas. I think I was in that trade for about 2.5 weeks, the natural gas trade, and I put it on 680 about here, and the market 5th of October, and the market did, as soon as I put it on, the market just went up. I think my stop was about 730, so I didn't get taken out, and then and it's been a really good sell-off. Really nice, easy trade this week, just dragging the stop loss down, and an interesting one to watch next week and see what happens. That's natural gas and oil. We did that, so I think they're interesting markets to watch next week. Let's take a look at stock markets. I have not been paying hardly any attention, I must admit, to stock markets this week, but here it is. This is the S&P. What can you say? Not a lot. You know, we are trading on the S&P where it was a week ago, or the open. Where it opened last week is where the market is trading today. The trend off these highs is still down from mid-August. Clearly 3800, 3810, bit of a barrier. For me, there's just not a lot going on there. If I had to do a trade today on the S&P, what trade would I do? I would probably try and sit on my hands and sell strength above 3,700. At the moment, it's 3,680. But it's all just been a bit blur, really, isn't it, the S&P? For me, anyway, over the last week. So nothing too exciting there. And I think only if it starts to break 3,800 does it start to look as if this correction from August is over. I wish it would be over, because I'd quite like to just get back to buying S&P ETFs for my ISA and my pension and stuff, because at the moment I don't really want to be buying into a falling market, but we'll see what happens. So nothing too exciting there. Same for the Nasdaq. So the Nasdaq 100, again for me, 11.4 to 11.6 is the barrier. It's clearly had a look below the lows from June. It has edged lower, as has the S&P, but again, I'd probably rather be a seller than a buyer, because the trend is still down on that one. Let's take a look at the German stock market, the DAX. Same thing there. DAX trend since the 5th of Jan is still down. It did look at one point here. I did have a trade on in here where it held above the March lows, so held above the Russian invasion of Ukraine lows, and I did buy it here and had a bit on the way up. But boom, it's gone down to new lows again now. The only question is this going to be some sort of sustainable recovery? Again, for now, because the bigger trend is still down, I'd much rather be a seller rather than a buyer of the S&P. Let's take a look at the FTSE, UK 100. Take a look at that. I mean, the UK 100, as I often said, does its own thing. Clearly, pound weakness helps the FTSE. I'd be a buyer. If I had to buy any stock market, I suppose the FTSE is down. It's been pretty sideways for 12 months now, and definitely for most of this year. And it's down at the bottom of the range. So if I never trade the FTSE, because it is just a bit directionless. But it is at the bottom of the range. Perhaps if we see a bit more strength in other stock markets, a bit more pound weakness, it'll get dragged back up to 7.2, something like that. But nothing too exciting there. And the Japanese market, which we haven't looked at. It's a bit boring. It's like FTSE, isn't it? Just a bit sideways, isn't it? I mean, again, it's well above its lows, unlike the US markets. But stock markets still trying to figure things out, I think, at the moment. So nothing overly exciting for those two either. I think I'm just watching this stream on a separate laptop, and it's died, but I'm assuming it's still working at your end, because there's the odd question still coming in, so I'm assuming everything's working okay. So yeah, so a bit dull stock markets, but still for me, because those trends are still down, I'd still be leaning to be a seller rather than a buyer. And I think it's there's some obvious levels that need to be broken on the daily charts. Can someone just type in that everything is still working, because I'm looking and something else seems to have died as well, or is it just me? No, I think it is still working. I hate these the technology and live streams. Oh, perfect. I'm still there. Excellent. Thanks. Right. So stock market's still a bit boring. So for me, the markets to watch next week are oil and natural gas. I think a natural gas price is slipping again today. Gold and silver, because we're down on these big levels. And the trade I'm in, euro sterling. Where's euro sterling? Just to see if it can continue this little recovery. We didn't look at euro against the dollar, did we? Let's take a look at euro against the US dollar. Again, nothing too exciting. Big trend still down off the Feb highs. Is it trying to stage a recovery? It's early days. I think like I said last week, it really needs for me to get back above parity with the US dollar to suggest that the downtrend is perhaps coming to an end. So all a bit uneventful. Gilts. Let's take a look at gilts. I did a trade on gilts this morning. I'm buying UK bonds for the Boris bounce, the triumphant return of Boris Johnson to save the country. So I bought gilts this morning. This is the hourly chart. I said I did a good trade on it the other week because I bought it on that false break I was talking about last week when the Bank of England said they were going to stop supporting the markets in 3 days or something, and they spiked lower but didn't sell off, and so I caught a chunk of a move there. Haven't traded it since, but I did trade it this morning. I ended up buying in here, so I'm a little bit underwater at the moment. But I do wonder, again, given the utter lunacy week on week in the UK at the moment in politics, I thought gilts had held up pretty well, considering this was yesterday when ex-Prime Minister Truss, or she's still the Prime Minister, when Liz Truss resigned, they had pushed out, they pushed out continuing this shorter term recovery over the last week, and they sold off a bit today, but they didn't collapse, so I bought back in. I thought, do we see perhaps further recovery in the gilts market next week? So, given what's going on at the moment in the UK, really interesting market to watch, but absolutely no doubt what the big trend is in gilts at the moment. They were, it was August 2020, it's a couple of years ago. They were 140 and they've traded down to 91 this year. But I wonder if we get a bit of a bounce back in gilts. Let's see, because again, there comes a point where all the bad news gets factored into the market, and markets have had clearly a lot of bad news to deal with. And we haven't seen a sustained move lower in gilts in October. So we hit this low in September, bit of a bounce, had a quick look below it, came off it quite quickly. So I wonder is the contrarian trade, because I did see something again on Twitter saying, the gilts market's really volatile today, and someone had zoomed in on like a 5 minute or a 1 minute chart of gilt yields, which is always going to look quite drastic if you're zooming in on that bit there. But I do wonder, if we take a step back and look at what it's done over the last month or so, are we going to see a bit of a push higher in gilts? Let's see. I'm long. We'll see what happens next week. For me, it'd be quite nice if it got pushed back up through 101 and started a recovery. Let's see. So that for me is always an interesting market at the moment as a reflection of confidence or otherwise in the UK economy. So that's it. That's the market. So like I say, next week, energies, oil and gas, gold and silver for me, euro sterling, and gilts, just because of everything that's going on at the moment. So I'm going to jump into your questions now. Quick reminder, if you've got any questions for me afterwards, drop me an email, dj@davidjonestrading.com. And to find out about the trading course, go to jonesthemarkets.com, and to go and buy it, go there, and it's great. So there you go. Let's look at the stuff you want covering. Let's have a look. We did the natural gas thing. I wouldn't think about being a buyer yet. You said I wouldn't. I'd wait absolutely on natural gas to see, because it is absolutely still weak, but an interesting week next week. Plug and Arc. What's Plug? That sounds like some sort of electric stock. Don't know what they do. Electronic technology. That looks not good. Looking at that, let's have a flip on the dailies. For me, what's all this nonsense? Events, aren't they? For me, you could make the argument, even though it has been sideways for Is that this year? Where does this year start? Oh, that's 2021. Even though it's been, I suppose, broadly sideways for this year, we've still got lower highs and lower lows in plug. So I think I would not be in a hurry to do anything at the moment. I suppose if you want to be really aggressive, you can take the view, well, are we going to see the buyers come back in ahead of $12.70? That was the big low in May. So for me, if I absolutely had to do a trade, that would be what I'd be watching. But I wouldn't be doing anything today because it's still weak. You know, it's pushed to a new low for this down move today. So let's see what happens down at $12.70 or thereabouts. You know, 12.70 to 14. What happens down there? And it could be perhaps an aggressive trade if you fancied it, but it wouldn't be one for me personally. But let's come back to it and see what happens. ARK, the old Cathy Wood's vehicle. Which one is it? ARK Innovation, isn't it? That's the usual one, isn't it? I mean, that's the one. If you don't know the story behind ARK, it's really interesting. You know, Cathy Wood, the darling of many US investors in 2020 and early 2021, I think. So it's an ETF, exchange traded fund. Had been, I don't know if it still is, I'm sure it still is, big investor in the likes of Tesla. So, you know, big exposure to tech stocks. So, of course, followed the market up, makes everybody look like a genius, and has followed the tech market down as well. So for me, I remember when I used to do the old live streams, doing a trade on ARK. I think I bought it on ARK. If I look at sort of that sort of thing, buying maybe in here, thinking, is it a recovery? And the recovery, I mean, it ran from 35 to 52. So in percentage terms, it's a 50% move. Obviously, it looks tiny on the chart because of the sort of declines we've seen on the chart. But for me, it's slipping now, or it has been this month over the last week or so. It's slipping below those old lows. So again, if you wanted to be really aggressive here, be a buyer at 35, where they're trading now, and put a stop loss under whatever the low was from about a week ago, which is 33.70. So let's say you're a buyer at 35 with the stop at 32. You've got $3 risk. And if this is going to be a base again, you've got a lot of potential upside. Again, it's not what I would do because I think it still looks pretty weak. If we flip this over to the hourlies, what does it look like on the hourlies? But, you know, for the more aggressive out there, it's perhaps an interesting trade. I mean, on the hourlies, I would say that trend is still down. So again, I would be a bit patient. You know, if there's one thing I've learned over the years, it is patience pays. You know, these things never turn around, or very rarely turn around as quickly as you think they're going to turn around. So for me, I still wait it out and see. But it is interesting down here to see what happens. But the fact it has, you know, briefly at least slipped below those old lows will be a concern to me. United Health Group. Oh, United. Sorry, UNH, isn't it? UNH. I think I've traded these in the past. UNH Incorporated. Looks a bit boring to me. Trend is up though, absolutely. Big trend is still up. So the big trend, depending on where we took the trend line from, I don't know where. I'd take it, I don't know, from here or somewhere, I suppose, something like that. I mean, that trend is up. Is up, isn't it? I'm still getting used to drawing trend lines on this thing. That trend is up, isn't it? For me, Harry hindsight trade, great trade down here in June of this year when it got knocked back to 460 because these are big important levels going back to November. So for me, I'd rather sit on my hands. It's a bit stuck in the middle at the moment, isn't it? So I'd rather sit on my hands and see, do we get a bit of a dip back sub $500 again? But the big trend is up, isn't it? So nice big trend, that one. So I'd still rather be a buyer on a dip rather than a buyer just now. So we'll see. Could you tell us if the mid-term elections may act as a bullish, bearish effect on the US dollar? I don't know, to be honest. I think it would be interesting to see what happens, but I don't really have a view what effect the midterms will have on the US dollar. I do, I think I've said a couple of times, I do wonder if something will come along that knocks the strength out of the US dollar. I don't know if it'd be the midterms though, but we'll see. But I must admit, I have not followed US politics very closely over the last 3 months or so. So I've got absolutely no idea what's going on with them. So I can't add much to there. Do you think Euro Aussie will remain bullish? Let's have a look. So the Euro against the Aussie dollar. Let's have a look at that one. Now, I think that's a difficult one, isn't it? Because, what would you say? I suppose you could say at a push, the trend is sort of down and looks something like that. So actually, if I had to do a trade, I'd be a seller. I'd be a seller of the Euro against the Aussie at the moment. And if I had to go short now, I'd put a stop. If the market's at 155.20, I'd put a stop above 157 and look, if I got stopped out, look to get short again. Because it's been, looking at it this year, it's been in a bit of this sort of sideways range since March, has a breakout, but we know we've got lots of problems up here. So I would be leaning towards expecting this strength to run out of steam. And for those of you who are fans of the old squiggly lines, we've got bearish divergence going on where the market's pushed to a high, the RSI's gone overbought, the market's pushed higher still, the RSI is still overbought, but it's made a lower high. So again, can be a suggestion that perhaps the strength is running out of steam. So for me, it's had a really good run, the Euro against the Aussie, off those lows in late August. I would just be worried that we're going to see normal service resume and the market sell off a bit. Let's see what happens. Snapchat has just opened minus 30%. Let's have a look. Snapchat. Oh yeah, it's a dog. I mean, look at the state of it anyway, though. This is a great example of the risks of bottom picking. When these, actually, we'll have a look at Netflix as well because they had good numbers this week, didn't they? So Snapchat has gone with a text messaging application very popular with the youth, apparently. It's gone from 76 to $7.50 today. When was it at 76 then? Oh, in a year. It's down 90% in a year. I mean, for me, absolutely a do not touch one. I'm guessing they've had numbers out. They've had quarterly earnings out, I'm guessing, last night or something. Snapchat. Let's have a quick look. Yeah, Snap earnings show revenue growth slowing. Yeah, that was 17 hours ago. Misses on Q3 revenues. There we go. Again, I mean, I wouldn't touch it with a barge pole. The aggressive trade, if you thought that the market was overreacting, I mean, I would wait. This is the hourly chart now. I'd wait for it to stop going down and be a buyer and put a stop under whatever the low is. But for me, that is absolutely trying to catch a falling knife, isn't it? And trying to catch a falling knife in Snapchat over the last year has not done anybody any favours, have they? So let's see. Okay, hang on a second. I know you are a technical analyst for over 25 years. Is it 25 years? Yeah, it is. 1995, I did the exam. Can you give us some lessons on how to have patience? I do think, joking aside, patience is one of the most important things to have when you're trading. And it's hard. And I mean, for me, I think I said I was away for a couple of weeks. I went away on a road trip and I was trading on that, but I was only putting a trade on in the morning, driving around, and then only looking at the markets in the evening. And it worked perfectly fine. So I think actually, if you do struggle with impulsive trading, do what you can to get yourself away from being sat in front of a screen. Go and do something else instead. But absolutely, patience pays. But it is hard, and it is, for me, it is waiting, like in this oil trade that I nearly jumped on it and chased the market this afternoon. And for me, I want to be a buyer of oil, but I'd rather be a buyer at sort of 84 than 85. So it's just having the patience to walk away. And I'm a big fan of setting up alerts. You set up an alert and say, well, right, if the market gets to that level, I want to be a buyer or a seller, and do nothing and don't watch the screen while it's doing that. Go and do something else instead. So I think you have to, if you're not a naturally patient person, you have to force yourself to do it. Do you watch multiple support or resistance levels, or do you watch the higher time frame levels? Good question. It depends what time frame I'm trying to trade. So I still do favour trading off daily time frames. So I've got two approaches Well, 3 approaches. Well, 2 time frames, 4 approaches. Let's say it that way. So for me, I'll always start looking at the dailies. So like on pound against the dollar, I'd want to. If looking at that, I'd be a seller, and there's obvious resistance there and resistance there. But if I'm doing a shorter term trade, I'd look at the resistance levels in that time frame. But again, be aware of the bigger picture. I think if you're ever in doubt of a trend in a market or where the important levels are, default to the bigger time frame. Go up 1 time frame. So if you're looking, like me, if you're looking at an hourly chart and I'm not sure, then I'll go and look at a daily chart. Dollar Swiss. Let's have a look at dollar Swiss. Yes, our Tesla we were going to look at, weren't we? Have a look at Tesla as well in a minute. Not Tesla, Netflix. Dollar Swiss on the daily chart. Let's have a look. I remember this from last week. Again, it keeps trying to knock its way through that level, doesn't it? I mean, is it a false breakout? Again, I think there's absolutely an argument here for being a buyer or a seller. Okay, so the markets try to get through this level that's been in place since May of this year. So you could take it that it just can't break that level. So you could go short. Now, going short wherever it is trading with a stop above the high so far. So 100.44, and the high is 101.50. So you could have a 130 point stop, let's say, and go short on the basis that yet again this level is holding the market back and the break today is a false one. Or you could take the view that the market's clearly gearing up for a big breakout here and be a buyer. So it's really interesting, but fairly inconclusive, I'd say, from when we looked at it a week ago. Interesting one to watch, but for me, not a lot going on, not a lot to do at the moment. Let's take a look at Netflix, then we'll take a look at Tesla. So Netflix was, I can't even remember what the headline was from the earnings. Did they added more subscribers, didn't they, I think, than people were expecting. Netflix reverses subscriber decline, adds 2.4 million subscribers. There we go. I think that's an interesting move in Netflix, because looking at the stock, again, if we pick up the trend, was that, and that's gone. It gapped up after the earnings and it's held the gap. So for me, if I had to do a trade on Netflix now, I would be a buyer of Netflix. The only question would be, where would my stop go? And for me, I'd probably put it the other side of 250. I'm not one of these people who feels that gaps always have to be filled, because that's not the case. There's no law that says that this gap here has to be filled eventually in Netflix, 480. But for me, I think it's a really interesting move. Positive reaction to earnings. It has so far held on to that earnings move. A more aggressive stop would be to go underneath the lows since the earnings, which is Wednesday's lows down at 262. But interesting, Netflix, that move off those earnings. Right, Tesla, somebody said. Let's have a look at those. Tesla. What's going on with the old craziness with old what's his name? Elon Musk threatening to fire 75% of the Twitter stock, isn't it? If he takes them over, which he is going to do. It's interesting that it's been really knocked back, hasn't it, Tesla? I wonder if that is because of the Twitter stuff. Anyway, whatever the reason, I would be thinking about being a buyer of Tesla now. We've been knocked back to these old lows. Obviously, it did the share split, so these old lows I think would have been $600 in old money, wouldn't they? I think. But for me, I wonder, will we see a bit of strength for Tesla coming in? Lots of support going back 18 months now from $180 to $200 on Tesla. So I wonder if we do see a bit of a bounce here for Tesla. Again, I might want to be a bit more patient, but if I absolutely had to do a trade on Tesla, that would be the trade for me at the moment, being a buyer. And the closer to have my stop would be the other side of $200. How long do you stay in an open position if something is sideways because of overnight fees? I do not give a monkeys about overnight fees because they're tiny. I think it is the one thing to check with a broker, because some brokers do charge much more for holding overnight than other brokers. And there's one I can think of in particular, who I'm not going to name. So always check it. But for me, I don't care. Overnight fees are a relatively tiny part of the overall trade. So I don't worry about overnight fees because I make sure I'm not being charged an extortionate amount. Clearly, if interest rates continue to go up, overnight fees will rise as well. So it might be more of an issue. But for me, I don't worry about it. If the market has gone sideways after I've been in it for a while, then I will think about tightening my stop. I mean, silver, it wasn't really the reason I tightened the stop in silver and came out of it. But, I've only been in the trade since Monday, I think. But it had gone down once and it came back to where I got in. So I got a bit fed up with it. And then it went down again today and I thought I'll tighten my stop up. And it ended up being the right move. So if the market, isn't really moving, then I will think about tightening the stop. But my natural gas trade, more often than not, actually tying it back in to that question about patience. Being patient has made this my biggest winner in the month, probably my biggest winner for a couple of months, and having to sit through a lot of the boringness here for about a week. So again, if it's going sideways, and I'm short, I might bring my stop down to the top of the sideways range, tighten the stop up a little bit, but I'll always still try and give a trade a chance to work out okay. So I don't worry too much. Does anyone manage your account on your last trading platform? No, we can log into it. Hang on a second, because all those trades, I don't think they're managing it anyway. They won't mind me logging into it. So all those trades are still running, I think. So I think it's still, there we go. Let's put it up there quickly. So there's a load of trades from all the old live streams and stuff. What are the big winners? I mean, obviously I haven't paid attention to it. Euro dollar short is a big winner. What's down there? Gold short, still big winners. And again, look how long that trade was in for. Since the 4th of August. Netflix, I knew there was a Netflix long somewhere. That must have been in an old live stream, 1st of July. So I did that. There we go. There's a little trip down memory lane. So there we go. Let's go back to this. So there we go. Will a recession push risky assets even lower? Who knows? How much of a recession is already priced into markets? I don't know. I don't know. I think if we look at something like stock markets, how bad do stock markets think things are going to get again from here? I do think, given where inflation is, I feel like we've got to be surely near peak inflation, I think. So I think if inflation starts to calm down a little bit in the beginning of 2023, and the economy will be lagging behind it, I don't think we're going to have a massively long recession. And I wonder how much of it is priced in. But for me, again, I don't overthink this stuff because in the great scheme of things, who knows? For me, I just wait and see what the market's going to do. So, and Boris Johnson's coming back and he's going to save the economy, isn't he? So it's all going to be okay. Maybe he should be Prime Minister and Chancellor and everything will be fine. New York sugar. I haven't looked at that for a while. Let's have a look at sugar. Sugar cash contract. Let's have a look at that one. If that's the right one. I'm not sure if that's New York or UK. I think that is UK. New York, isn't it? That looks boring to me. A big fan of this market in the past. I think I said in the past, over the last 4 years, sugar, and I would never have believed this if I hadn't gone back through, sugar had been my most profitable market. I would have said something like the dollar index or something like that, but because that big trend there, and it's just been a bit dull this year. I think I did do a trade beginning of the year, wondering if it's going to get a move on, and it didn't. To me, it just looks a bit dull. Perhaps it's even topping out. We saw a lot of these commodities, agricultural commodities, have a really good run and then stop. So for me, that does look a little bit boring, sugar. So from a trading point of view, yeah, maybe be a buyer on weakness to 17.20, but there isn't really a trend in there. So it's not one for me. Let's have a look at wheat. What does wheat look like at the moment? Wheat, again, I think I do have a trade on wheat actually. I bought in down here and I'm still in the trade and it's come back a bit, but clearly well off those the Russian invasion of Ukraine highs. The other thing I was going to look at was soybeans. Just to see again if some of this, I think these agriculturals have definitely cooled off, haven't they, over the last few months, which again would you'd think help inflation. Coffee, I'll have a look at one more and then I'll jump back in. Yeah, coffee as well. Coffee is trading at its lowest for a year now, and that again had a really good run. So all this stuff will be good for inflation. because it'll hopefully, it'll take a while to feed into the numbers, but the price of stuff going down clearly is going to help. How do you determine setting an alert versus setting an order? For me, it's a good question actually. I do trade with orders. I tend to use alerts more for thinking about taking profits. So for me, for example, if I go back to that euro sterling trade, wherever it is, so I'm in that trade from yesterday, from about 5 o'clock yesterday. For me, and I'll have an alert set. I had an alert set for this morning, I set it when I opened the trade, if it breaks through yesterday's high. So I tend to use it just to get me away from the screen, and then I might think about moving my stop loss. So I know that's not a really comprehensive answer, but I tend to just use it to give me an excuse not to watch the screen. Oh, excuse me. Earnings seasons next week. Big tech companies. Fair enough. Let's have a look. Who's out next week then? Oh god, I've just got a list of loads actually for next week. There is, yeah. It's a really busy week, isn't it? Well, let's see. Plenty of volatility then for stocks off the back of that. India's Sensex has performed better than the S&P. Let's have a look. I think we looked at that. I do remember looking at the Nifty 50, wasn't it? So let's have a look at the index, see what it looks like. Is that the Sensex? I'm guessing that's the Sensex. It has had a much better run, hasn't it? Let's put a daily chart on. I'm looking at the hourlies. I mean, again, it's had a really good run since June, isn't it? Overall, I would say the trend for the year so far has been pretty sideways, and we're knocking at the top of the range. But absolutely has outperformed US markets over the last 3, 4, 5 months or so. So but I wonder, is it going to start to get a little bit nervous again up at these levels? Let's see. CCJ uranium producer. CCJ uranium. CCJ, it's not coming up for me. Cameco, is it Cameco? Cameco, is that the one? Non-energy minerals, I'm guessing it is, isn't it? That to me looks a little bit boring again. So for me, arguably be a buyer. It is sideways, isn't it? We've been pretty sideways this year. It's gapped down over the last couple of weeks for whatever reason, earnings or something, who knows. I'm just guessing. It's gapped down, but the old support around $20 has held. So for me, if I had to do a trade, I'd be a buyer, but I'd rather be a buyer in a dip. But it does look a little bit boring to me, that one at the moment. But it is at the lower end of the range. 3M. This used to be a really good trending company. Oh, it's clearly not for a while. I've absolutely traded this in the past, but clearly not since about 2018, because I do remember trading it in 2016, trading this trend. I mean, that's got absolutely bombed out, hasn't it? It's gone from 260, so it's halved in it's about 4.5 years, isn't it? I suppose. I mean, it's interesting down here. It's because 3M has gone back to the Corona lows, right? So the Corona lows, and has taken those Corona lows out, isn't it? So the Corona lows about $115 a share. For me, I'd much rather be a seller than a buyer. So a seller on strength, because I mean that's pretty weak. To break those lows, it's bounced back quite sharply, but I'd still rather be a seller. But it's an interesting one, that, considering it's broken those lows. Right, I'm going to have to start wrapping things up there. I want to have a look at Starbucks, actually. Go on, let's have a look at Starbucks. I don't think I've looked at that one. And then we'll start wrapping things up. Starbucks, I mean, I'd be a buyer, I think. Because you could make the argument, absolutely, that the correction that's been in place for much of this year is over. Yeah, so if I picked up on that as a quick squiggle, and it is at least trying to make a recovery. So for me, I'd be a buyer. I might want to try and be a bit patient and buy the dip, but I suppose it looks something like that, doesn't it? So for me, if I was a buyer now at 87.75, the closest I want my stop would be the other side of 82. So let's start wrapping things up. So like I say, stuff to watch next week. Natural gas is interesting. I appreciate it is always a crazy market, natural gas, but it's today it has broken down to nearly a 7-month low, but the big trend is still up. Let's see what happens. I think that's interesting. Oil, is it trying to turn around, continue to turn around this correction that's been in place since June? I think it is, but let's see what happens next week. So that's interesting. Gilts, just because what's going on in the UK, the craziness we have in the UK because of politics at the moment, I think is an interesting market to watch next week. Pound against the dollar, not much going on, lots of noise, not much direction. So let's see what happens. And everything else is a little bit wait and see, I think. I see someone's just come on and said, have a look at dollar yen. As you are so politely, we'll have a look at dollar yen. We have had a look at loads of currencies today, or quite a few currencies today. But for me, that trend is incredible, isn't it? Even though the dollar index has stalled a bit, the dollar against the Japanese yen continues to continues to rise. I mean, look, that for me is like the perfect trade, isn't it? Since the 5th of October, all we've had are green candles. What a dream trade that is. It's gone from 144 to 151. Absolutely nuts. Multi-decade high. Again, so again, for dollar yen, what are you going to do? You're going to be a buyer. Well, I'm going to be a buyer of dips or a buyer of breakouts. Absolutely incredible one. And for me, it would need to take out at the very least 140, the low from the third week of September, to suggest that trend is over. So there you go. We've ended on a high point there today. So like I say, any questions, drop me an email, dj@davidjonestrading.com. To find out more about the trading course, go to jonesthemarkets.com. I'll do this again next Friday at 2:30. So if you're not subscribed, if you make sure you're subscribed with the alarm bell clicked, and we'll do it all again then. Okay, thanks for coming along. Enjoy your weekend, and we'll see who the Prime Minister is this time next week.